All right, here we go. You asked for it, you got it. This is a video I'm going to make about the stock market. It's not my first one. I've made a few videos in the past. But before we get started, let's go over a few of the basics, all right? I put this chart up here. This is GameStop. This is their charts. I just put it up there. In all honesty, I put it up there as so I can use it for a thumbnail on the video. Guys, I don't buy stocks, okay? What I'm going to show you in this video is a way for you to invest your money. You can be paid up front, and you do not have to pick the right direction. You don't have to say the stock's going to go up. The only thing you really need to know is the stock going up or the stock going down? That's basically all you need to know. With the strategy, it doesn't take a lot of work. It doesn't take a lot of effort. It allows you to invest small, tiny amounts in bigger companies. I don't even know. It's kind of like insurance. It's like an insurance thing, but you do not have to be right. Now, you can't be totally wrong. Let's get that straight. Okay. Investing in the stock market is extremely risky. See it down here? Down here. Disclaimer, disclaimer, disclaimer. I am not a professional, guys. I'm not a professional. This disclaimer is from StreamYard. I didn't even write it. Okay? This video is for educational purposes only. And you have to understand, I'm not real smart. But what I'm going to show you is pretty simple. So, what is an option? Let's start there. What is an option? An option is a contract. Okay, it's a contract between a buyer and a seller. Whether you're a seller or the buyer, it depends on how you choose your position. Okay, an option is a contract. That contract is for a block of 100 shares that they call a book. Okay, I believe it's called a book. You will see when we get into this that one book of 100 shares is what's representative. This is represented. This is where it gets a little confusing for people. They don't understand that they're looking at the book of an option, which is 100 contracts. So when you see a price of $1, that's $1 per share of all shares in that book, which is 100. So the price would be $100. I hope that makes sense. But here's what options are. Options are the right to buy or sell 100 shares of a stock for a predetermined, on a predetermined date for a set price, regardless of the true value of the stock at that point. Okay, that was a mouthful. Let me say it again. Options are the right to buy or sell 100 shares of stock for a predetermined date for a set price, regardless of the value of the stock at that point in time. So basically, here's what happens. Okay, let me go to the screen so you can see. All right, there it is. And now I got to go over here. We'll go back. You got to go back. This is Robinhood. I use Robinhood. Here are the options, okay? I said that you can either buy or sell, depending on which side of the contract you're on. for a predetermined price on a predetermined date for a set price. So here's where you find out the predetermined date. If you want the contract between you and the other party to end, they always end on Friday. If you want it to end this Friday, then the contract would expire on February 5th. I hope that makes sense. If you want it to expire a little bit after my birthday, then the expiration date would be February 26th. That's the predetermined date. That is how long the contract is for. Now, the predetermined price of the stock is called a strike price. See right here, strike price. Right now, GameStop is right here. This line is currently at $93.71. This will change as the stock price changes. If you want to buy the stock cheaper than what it's, if you think the stock price is going down, then you're going to want to buy it cheaper. Okay. If you think the stock price is going up, then you're going to want a higher strike price. I know that's a little bit confusing, but it's just the basics, guys. You really don't have to understand this part of it. All right. It's kind of like cutting your grass. I don't know how else to put it. You know how the lawnmower works. You pull the cord, you push the mower, the grass cuts. What I'm going to show you, once you fully understand it, you will be able, well, first of all, this is I believe it's a level 2 options trade, which means you have to have some experience to even trade this. Unless you use a professional broker who will probably be able to get this trade for you. This is what I'm doing, guys. You asked to know, you asked to see what I'm doing. Here's what I'm doing. I don't know what else to do for you. All right. I trade credit spreads on solid company stocks. What's that mean? I don't play with GameStop, that's for sure. What's a solid company? There's lots of them. Apple, Ford, GM. These are all established businesses that have been here forever. They've been around forever. Coca-Cola, established company. Pepsi, established company. Apple, established company. Facebook, established company. General Electric, established company. Amazon. Where do you expect that stock to go? Well, over a period of time, you expect that stock to go up and to the right. Up and to the right would mean that the value of the stock over time is going up. Well, since the market's opened in way back when, in general, the stock goes up and to the right. The stock market goes up and to the right. My retirement is invested in a total index fund for the stock market because I expect the entire stock market to go up and to the right. That Dow Jones number you hear, if you're old like me, you used to hear it 5,000, 4,000, then you heard 10,000. It'll never get above 15,000. Then it hit 20,000, 25,000. Now it goes over 30,000 sometimes because it's always going up and to the right. Not always. Let me correct that. Over time, it has always gone up and to the right. Though you can always pick out a period of time where it goes down and to the left. Down and to the left. You don't want that. That's the value of it dropping like a rock. Kind of like GameStop's doing today. So let me show you this trade that I'm talking about. I'm going to use GameStop only because GameStop's in the news. I got to share my screen. Boom, boom, boom. I'm not real good at this yet, guys, so you got to give me a chance. It's called a credit spread. And I'm going to show you because I believe, let's say we believe GameStop's going to go up and to the right. And over the next year, we expect GameStop to be over $100. Okay? So a year from now, we want the contract to expire January 21st, 2022. Okay? and we expect GameStop to be over $100 a year from now. Now, this is where you can actually, let's see if these, oh, I got to put it on put. Sorry. I had it on calls. I'm like, why are the numbers backwards? All right. So I think GameStop's going to go up and to the right. It's going to go up in value. Now, here's the strike prices. This is called in the money. I go several strike prices out of the money. So this is the first one out of the money. This is the second one out of the money. The third one out of the money. This is the fourth one out of the money. Okay. This is about where I try to go about 4 or 5 strikes out of the money. Okay. I don't make as much profit, but it's not as risky. Now with GameStop, we all know that GameStop is going to blow up. So the first thing I got to do is I go 4 out of the money. 1, 2, 3, 4. I want to sell that put for a credit. And I'm going to add it, and you're going to see that I'm going to get a $489 credit. Total credit is $48.90 credit. That means they're going to put the money into my account. Now, they won't let me make this trade because I don't have enough behind it. I don't have enough cash to cover my losses. So they're not going to let me make this trade. So how do I make this trade to invest some money saying that the stock is going to go up and to the right so that it's going to make some profit? What I do is called a credit spread, So the first part of it, they call it a leg, the first leg of the contract. Now, these are just fancy words. Okay, the first part of the contract, the selling part of the contract, which is the higher price on a credit spread for the put side, is always the selling. Now, I need to buy the next strike down. Okay. What this does is this gives me a credit. Okay. This protects me. If the price goes down below $75, it's, no, I'm not explaining this well enough for you. This says that this says that we're saying the price is going to go down. Okay. This says, no, this says the price is going to go up. See, this is where I get confused too, guys. Anyway, there's a $5 spread here. Okay. The most that I can lose is the difference between the higher strike price and the lower strike price, which is $5 per share on an option book, which is 100 shares, $5 per share, 100 shares, means the most that I can lose is $500 on this trade. Now, how do I lose? The price of the stock on January 21st, 2022 has to be above $75. So I'm saying the stock's going to be going up. It's going to be worth more. It's right now at $93. If it goes up to $100, it's above $75. So I make a profit. I get my profit up front. That's what this credit is over here. We'll get to that. I'm trying to show you where you can make the money. Now, let's say I'm wrong, and the stock on January 21st, 2022, after a bad pandemic and COVID hits again, and the stock is $81. Let's say $80. It's still above $75. It's still above $75, but I was wrong in where the stock was going. I still get paid because I get paid as long as the stock stays above $75. Okay? Now, what happens if the stock goes below $70? I lose my $500. Okay? Because I was wrong. This is gambling, guys. If you say that the stock is going to be above $75 and it comes in under $70, you're going to lose $500. If it comes in at $60, You lose $500. You can't lose more than you put up at this point. It's called collateral. I got to switch back and see if I got questions. I'm sure I do. So that's how that works, guys. Now, how do I get paid up front? This is why it's called a credit spread. If I go to write this contract, now it's not going to let me write this contract, so I got 8 cents of buying power with Robinhood. Okay, I got a whole 8 cents in Robinhood. I just like their interface right now for teaching purposes. So I'm selling the higher one because this is a credit put spread. My higher strike price will be my sell price. My buy price will be the next strike down, the lower, $70. So I sell for 75, I buy for 70. This is where I believe the price will be above 75 on January 21st, 2020. So I want to write this contract. How do I go about writing this contract? First, you have to put in the 2 parts of the contract. Then you hit continue. This is why it's a higher level contract. Contracts, 100 shares each. So I want 1 contract. Minimum credit, $605. Wait a minute. You can't sell this contract's not going to fill. $605. I'm putting up 500 to make 605. No matter what this is saying, guys, and I guess I picked a bad stock. I got to switch because this is what that said was, what this says is, and let me go back to sharing the screen. Oh, I can't believe this happened. What this says is, if I make this deal, if I make this contract, and I can find somebody on the other side of the contract, okay, they will give me $605 in credit, all right, for a $500 collateral. So I'm going to review this, and it's going to tell me that it can't fill. All right, we know that. I don't have enough money. See, it says credit or debit. Are you expecting to receive a credit? I'm expecting to receive a credit. I know that. So I have to put up $500. They're going to give me $605. This is an automatic win. I cannot lose if this contract was to fill. How do I not lose? They're going to give me, I'm going to put up $500. They're going to give me $605. Even if the stock falls to $60, I keep $105 of that credit because my collateral is only $5. So this trade, if I was able to make it, would make over 20% for me. Okay? It would make over 20% on January 21st, 2022. That is crazy. I don't know. Echo says, I doubt you'll get the credit shown of $6. It will be more like $4.27. But it's a huge credit, guys. I picked a bad explanation. Anybody have any questions? Because I'm sure that's just confusing as all. I thought it was going to be easier to explain. This is why I don't teach. You guys all ask me. This is why I don't teach. This is what I look for. And I'm sure some people will understand this. This is where I go. This is what I do. This is real life for me. Apple, I go to Apple, okay? I trade my options, all right? I go out a year, and depending on how much money I have for collateral, I look for premium on my money, okay? This is how I understand it. Oops, I did it again. Sorry. I wish I could set it to be permanently on the put side. I only look at puts. All right. I expect that at some point, Apple's going to go up quite a bit. All right. So I'd probably come in right here around this 125. So it's 125 to 120, 122 and a half. That's a $250. It's 2.5 is the spread here. It would be a $250 deposit. I'd have to put up $250, but I'm going to get a credit for it. So let's see what the credit would be. Oops, sorry. I got to sell it. And then I buy the lower one. All right. I got $1.12. I get almost 50%. Now, is this a safe bet? Yeah, this is a real safe bet. And more than likely, I'm going to get this to fill. What it means is I put up $250. Here, I'll show it to you. Oops, sorry. Let's review the order. My collateral would be $250. My minimum credit back to me would be $113, which is roughly, what, 40%, give or take. And they're going to have my money for a year. The $250 stays with them. Then they, in return, give me $113. So my collateral really is, on this trade, I would need $137 for collateral. And on January 21st, 2022, as long as Apple was above $125, which I strongly believe it will be, it's a solid stock, they would release my $250. I would put up 137. The other 113 would be the credit they gave me. And on January 21st, 2022, I would get $250 as long as Apple is above 125. Now, there's some things if Apple falls in between here, but I'm not going to discuss that part today. I hope I helped you understand credit spreads a little bit. This is the way I work. I tried to short GMA when it approached 500-ish a few days ago. Been trying for days. TD Ameritrade never let me. Getting tired of all the restrictions. I am shorted on GameStop. Okay. The problem is no interest, no options. Correct, Joseph. But this is Apple. Look, I don't even have to look. There's 178 there. Okay. It's so far out that there's not a lot. There's 17 on this side. I may have to go down a little. Go up a little. But I could also lower my ask here, the amount of interest that I want on my money. I'm sure I could get this filled for over 100, but probably less than 113. You got to play with it a little bit. I could get it to fill if I really wanted to get it to fill. Apple's a great one for that. The problem with Ecopiphany, if the problem I'm having with GameStop right now, and I'll show you, in my Robinhood, and this is where I got it. GameStop went from, let's put this on a week so you can see where I was yesterday. Okay, GameStop was at $14. My option was at $14. It's gone down. It's gone down a penny. GameStop's dropped over 200. The options aren't trading very well right now. Do I believe it'll catch up? Yeah, I believe the options will catch up. I got the same thing with AMC. I got 20. I paid 27. Market value is 19. I believe if this price stays steady and doesn't bounce all over, then it's going to come back. it'll bounce back. If you have questions about, listen, this is my first one, guys. Beat me up if you must. I will put some money in my account. And, I will be doing this, and I'll show you what I'm doing. I'll try to explain it better over time, but please do not take my advice, especially if you're fat and old like me. This is my retirement. This is how I started my retirement account. Was credit. I was doing credit spreads. Put credit spreads is how I built some money up for my retirement. It is gambling. You have to be patient. You have to do a little bit of homework. But when you're in a pretty safe company like Apple, I was able to get some good numbers on Apple on a weekly credit spread. You can do it on a weekly for a much lower rate. And there's other companies out there. I just pulled up Apple. Here's AMD. Same thing. $100 stock. I think it's 80 now. $88. It's up a little bit. Same thing. You can trade the options on AMD. You can trade the options on SPY. It does not have to be Apple. But you want a solid company. You don't want GameStop. GameStop's not the right stock. You want an earning company. You want Coca-Cola. You want Pepsi. You want something that that's going to be in business on January 21st, 2022. Now, while we're doing this, let me show you one thing. You can go out far on these options, guys. You get into some of these really good companies, they go out far on these options. January 20th, 2023, June 17th, 2022. You can go out far if you want to lock your money up for a long term. What I like about it is I don't have to be right. I can get into the better stocks. I can catch the ride up on better stocks like Apple, Amazon, AMD, Coke, Pepsi, your blue chip stocks. I can catch the rise of those blue chip stocks where I couldn't afford to buy. How many shares of AMD can I buy at $88, man? I'm not a millionaire, so I can't be buying hundreds and hundreds of shares. There's other option strategies out there. This is the one that I really like. It takes the least amount of my brain power. And remember, this is something I do for fun. If I'm going to invest long term, I'm going to VTI. If this is my retirement money or money that I'm counting on in my retirement, it's going into VTI, guys. It's not going into the options market. I probably got a lot of thumbs down. Honestly, I deserve it. This was not a good video. I'll try and keep it up, but I get discouraged when I don't do good, and this was not a good one. My morning shows are getting better. Guys, I'll keep doing this as long as you keep watching. Remember the disclaimer, I am by far no professional. I don't even call the things the right thing. All right. I hope I helped you a little bit. I got a lot of AMC hundo squads in here. I don't think it's going. I don't think AMC is going to a hundo. Ain't happening. Guys, I hope and wish you the best. God loves you. Lord knows I'm trying. Get off your ass. Give me a thumbs up, man. Give me a little thumbs up here. And with that, I got to go. All right. I'll talk to you all soon. Have a blessed one. See you in the morning. Don't forget my morning show.